This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending March 11th, 2023. Our question this week is, what is DeFi? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 1.07% on Friday and was down minus 4.44% for the week. The S&P 500 decreased minus 1.45% on Friday and was down minus 4.55% for the week. The Nasdaq decreased minus 1.76% on Friday and was down minus 4.71% for the week. Looking at the week, we can see that there were 4 up finishes versus 11 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Tuesday and Thursday, all the major indexes finished down. On Wednesday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. And on Friday, all the major indexes finished down again. New unemployment claims were 211,000. Job openings declined in January. Payrolls rose 311,000 in February. Private payrolls rose by 242,000. Mortgage demand rose 7.4% for the week. Crypto-focused bank Silvergate is shutting down operations, and Silicon Valley Bank was shut down by regulators. New unemployment claims, job openings declining, payrolls increasing, private payrolls rising, mortgage demand increasing, a crypto-focused bank shutting down operations, and a major bank being shut down by regulators are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is DeFi? DeFi is an abbreviation for Decentralized Finance, which is an emerging way of doing financial transactions on a peer-to-peer basis, that is, on a person-to-person, a person-to-business, and a business-to-business basis without using a traditional bank or even a centralized bank like the Federal Reserve System. DeFi involves using cryptocurrencies to buy, sell, and borrow on a blockchain, which is a digital ledger and database. All who have access to the database or the blockchain can see the transactions. This is different from centralized finance, where a bank and or a processing or clearinghouse is used to process transactions, and the transactions generally cannot be seen by the public. Thus, the goal of DeFi include reducing transaction times and increasing access to financial services. There are a number of DeFi companies that have emerged throughout the world and in the US. Are you interested in DeFi? Do you invest in DeFi companies? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker, they did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending March 11th, 2023. The strongest performer on the list this week is Spider Gold Shares ETF, ticker symbol GLD. It's in the first column. It increased 2.16% on Friday and was up 0.9% for the week. The Spider Gold ETF offers investors a cost-efficient and secure way to access the gold market. GLD represents fractional, undivided, beneficial ownership interest in the trust's sole assets, which are gold bullion and, from time to time, cash. Looking at a summary of results, you can see that GLD has increased 2.49% year to date. I did not generate cash flow from GLD this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown in the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 12.21% versus 0.91% up for SPY, a difference of 11.3%. The Southside is beating SPY by more than 11%. The cash flow generated by the Southside cash flow system for this week was 1.21% of the portfolio account value. The account value changed by minus 11.92%. Meanwhile, the S&P 500 ETF SPY changed by minus 4.52%. Bitcoin watch, Bitcoin loss, minus 9.76% this past week, and it continues to be in a bear market. It is down almost minus 71% from its all-time high, which was achieved in November 2021. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $25.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists levels 1, 2, and 3. They are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.